Hello and welcome. You're watching us here on Your Stocks. This is a show where we answer all your stocks and investment related queries. We come to you live from the CNBC-TV18 Mumbai News Center. As we speak, before we get chatting about your stocks and investments, just keep an eye out in the markets. We're seeing some weakness and accelerated weakness today. And it's been one of the worst days that we've seen in the last many trading sessions, especially given the sort of powerful run that we had seen on our indices all the way up from 15,500 to close to 17,850. We had seen that big rally. So at some point there was to be a bit of profit give back, and that's exactly what's taking place now. The Nifty down in excess of 200 points, below that 17,800 mark as well, closing in on that 17,750 mark, and that's been led lower. Apart from a lot of the other indices, it's mainly the Nifty Bank which has led it lower, down 700 points for that index. Down almost 2% for that one. And after a very long time, we are seeing the advanced decline ratio move in favor of declines as well. Yesterday, the same time, we had nearly 1,800 stocks advancing for 1,000 stocks declining. And now it has reversed. We have about 1,800 stocks declining for 1,000 advancing. And there you have it. Somewhere in the middle of the day, we did have those lines crisscross, and the advances have only, the declines have only widened as against the advances, and that line has only moved higher. But despite that, we do have a bunch of stocks which are doing well. IRCTC is one of them, which is up around 5% as we speak. Z Entertainment has done well all through this week and is up around 4% today as well. And Tata Communications is the other stock which in today's move has erased all the other day's losses and has turned positive for the week. So that's about those stocks which are in focus. Now let's welcome our guests. We have Rajat Bose of RajatKBose.com and Parthiv Shah, director at Tracom Stock Brokers, to answer all your stock and investment related queries. The first one comes in from Nasik. Hemant Rane writes to us. He holds about 500 shares of Somato. He bought it at 78 rupees. 100 shares of Cummins is what he bought at around 218, and 20 shares of BASF is what he bought at 1915. He wants to know the future prospects of his investments. Parthiv, I believe he would have bought Somato when it was closing in on its issue price after having corrected a fair amount. And understandably, a lot of people would have thought that, those who didn't get it at the issue price, this is the closest that they would get to the issue price. So he bought it at around 78 versus the issue price at 76 after the stock had corrected from levels upwards of 140 as well. But be that as it may, he's sitting on some losses, and those losses have narrowed in the recent past. What are your thoughts on the stock after this correction that we've seen and the subsequent gain?
Good afternoon, Mangalam. See, Mangalam, in case of Somato, I think if you see most of the research reports, I think most of them attribute valuations to Somato based on discounted cash flow. And the consensus view is that a very fair valuation for Somato based on discounted cash flow comes to somewhere around 70 rupees a share. And this gentleman has purchased somewhere around 78, post which I think what we saw was some corporate developments in Somato which probably was not perceived or liked by the market for that matter, and the Blinkit acquisition was something which had huge question mark. And even till date, I think when they reported the recent quarterly numbers, no doubt the numbers were very good. In terms of the monthly average user base stood at around 17 million, which is quite healthy. The growth is good, but management is now talking about X of Blinkit, the EBITDA break even to come somewhere around in September FY23. So I think that's going to take some time, and our sense is that, it will come at the cost of marketing spends going down. And what impact does that have to the monthly average users? So all of that is a question mark. So I would suggest is currently hold on to the stock and try and take an exit near your cost, because that is where I think the valuations become very fair. And I doubt there will be more triggers to go beyond that.
All right, we take that point. So that's about Somato, but we have other couple of stocks as well, Cummins as well as BASF. Before we go to Rajat for that, Rajat, there are a bunch of stocks which are surging right now. Kesoram, for instance, is up 12%. For the last couple of trading sessions, cement has been doing well. So Kesoram has surged, and most of this gain has come by in just the last few minutes. The other one is Wockhardt. Wockhardt is a stock which is, corrected a fair bit from its highs. It's almost halved from levels of near 500 that we had seen sometime in the last 12 months. And today it's up almost 6% with fair amount of volumes as well. Giving it company are Stovecraft as well as Monte Carlo. So we do have a bunch of stocks which are actually doing well in an otherwise extremely wobbly market, which now has extended its cuts. The Nifty is closing in on that 17,700 mark as well, with the cuts expanding to 230 points. versus 200 Cummins. Our viewer has investments in these.
Well, Mangalam, I would say that regarding Cummins has actually posted a very good run in the recent past, and it is in an uptrend. The long-term trend is up, even the short-term trend all these days had been, it is showing good traction. I would suggest that his purchase price of Cummins is pretty low, 218. So given that, I would suggest a stop loss of 950 on the close, and he should continue to hold it because this is an excellent purchase on his part and he should be continuing with it. And regarding BASF, again, I would say that BASF has performed in a stellar fashion. If I were in his shoes, I would put a stop loss below 2350. That is on closing price basis, and I will continue to hold on. And I'm volunteering my view on Zomato. I would say that Zomato, unless of course it falls below 65 to 59 support area, Zomato can still bounce back. But definitely, if it goes below 59 and stays there, there will be some problem. But put a stop loss below 50 if you are really looking for a long-term play on Zomato, but not beyond 50. If it falls below 50, one should actually get out.
All right, if it falls below 50, one should actually get out of it. Stop loss of 50 on Zomato. Remember, the stock has rallied all the way up from 43, 44, going up to 62. So it's a near 45-50% rally that we've seen after a massive decline on that stock. Some bit of those gains being given up in today's trading session, alongside the weakness that we're seeing in all the other stocks. Just keep an eye out on Campus Activewear, though. The stock has rallied almost 13% this week. And in a weak market, that stock is up 7%. Remember, we alerted this as one of the mid-cap spotlight stocks yesterday. And the reason why it's doing well is because it reported good numbers, it reported good margins, and at the same time, there is fair amount of scope for penetration in the sports and athleisure market in India, which stands at much lower as compared to other nations in the world. So there is a structural, tailwind that this industry has had. Campus is a beneficiary of that, hitting a fresh record high on that counter. Let's move on to the next query coming in from Goa. Rio Trinidad writes to us, he holds about 500 shares of Reliance Infra. He's bought at 140 rupees. He also has 250 shares of Indiabulls Housing Finance. He's bought it at around 132. He's making losses, and how, in both his investments. Rajat, I mean, these are stocks that invariably do trap a fair amount of people on the way down when they buy it, thinking that maybe there could be a bit of a punt or an upside, etc. Not very well tracked fundamentally still, especially Reliance Infra. Your thoughts on them? Though Indiabulls Housing Finance on its part has tried to depromoterize the company. The results this time around were good as well, and the stock did well. But from a long-term standpoint, what are your thoughts on both these?
See, these stocks have started moving. Say, if you look at the rally that is happening now, that is more than 2 months old. That means close to about 63, 64 days. And these stocks are moving up only at the tail end kind of thing. So I would personally say that if one is really keen on holding on to Reliance Infra, one should put a stop loss below 100. I mean, if it were to go below 100, then definitely get out of it. Otherwise, if I were in his shoes, I would actually look for small gains, if at all that is possible, or else I'll get out on a break-even stop. Because if the market were to turn bad, Reliance Infra would suffer quite badly. And regarding Indiabulls Housing Finance, I would say that this stock is actually showing some strength. Maybe if today's correction is only a blip, then there is a possibility that it might actually try to test 150 through 160 supply zone. And if it fails to take out that, then definitely get out. Otherwise, put a stop loss below 100 on the closing price basis.
Well, you put a question saying if today's correction is only a blip. I'd like to ask you about your view on the market as well, because we are seeing some bit of a decline, and it was par for the course. But do you think it is a blip, or do you think it's the start of some reversal?
See, in that case, I trust only trend lines and moving averages, and I use only two oscillators, that is RSI and the MACD. Regarding that, what I would like to say is this, that I would look at the level of 17,680. That is the bare minimum that you need a close below and say that it is more than a blip. If that doesn't happen, then I would say it could well be another blip, and then there could be some more rise. But there are indications of extreme overbought situations as far as the RSI is concerned. So there are chances that one might actually see some kind of further correction happening. But one thing, Mangalam, unless the 20-day moving average, which is around, say, 17,300, 17,295 to be precise, and if it closes below that, I don't think there is anything, any major problem as such. But as it is, I have been telling people that 17,800 or rather 18,000, this zone, this 200-point zone is actually a strong supply zone because it has acted as a supply zone even earlier. So this is quite an anticipated thing. But if this fall were to extend beyond 17,295, falling below 17,680, then there would be problems. Otherwise, that would be considered a course correction.
All right, we take that point, Rajat. And for now, 17,700 has held. There has been a wee bit of reversal on the markets. The Nifty is now aiming, past that 17,760 mark itself. Let's get another query in. Firoza Irani writes to us from Surat. She holds about 15 shares of Affle at 900 rupees and 20 shares of Nykaa at 1270 rupees. She's making small gains in both her investments. I mean, 5,000 rupees made in Affle, the stock upwards of 1,200 rupees, and Nykaa also 100 rupee per share sort of gain coming in out there. Her cumulative gain on Nykaa being 2,000 rupees. So, Parthiv, your thoughts on both Affle as well as Nykaa? They are new businesses, but they have old traditions of cash flow as well as money making intact. What would your thoughts be?
Very valid point, Mangalam. And one of the key aspects of both of these new age interesting businesses are the opportunity size. Firstly, if I have to talk about FL India, I think if you look at their segments in terms of the revenues, I think the consumer platform where I think they're engaging with a lot of corporates to ensure that they have customer acquisitions and a mobile-led online to offline platform that converts the customer engagement into in-stores and walk-ins. I think this is a very interesting high-tech business model which has worked very successfully for FL. And if I look into the past con call commentaries, I think every con call they're talking about new interesting customer additions and also increasing wallet share from their existing customers. No two ways about it. On the face of it, I think if I look at the valuations, it's quoting at a trail multiple of 70p, and in terms of forward, probably it's quoting at around 55 times. It looks very pricey because if one were to compare this as a traditional IT company, then definitely the valuation is looking very aggressive. But looking at the vision of the management and the commentary that they've said, for the next 3 to 5 years, it would be safe to assume that such a company could grow by at least 30-35% compounded. And there is seasonality in terms of its quarterly growth. So if I analyze the growth at 30-35% over the next 3 years, such valuations are justified. So I would suggest a hold on to this stock. Talking about Nykaa, I think hats off to the management. I think in terms of the commentary that they gave, especially when the previous quarter was not that great, they had mentioned a huge surge and huge pickup in terms of overall sales. And post, I think the results, I think we saw that the traction was extremely good. This is one management in the new age business space where they're razor focused to ensure that it's going to be a profitable growth journey, despite all the capex, despite all the store additions that they're doing, and so many brands that they've added. It's become an ecosystem. As to in India, if any foreign brand needs to come to India, they would prefer not to spend the overheads and go with Nykaa's business model. So I think it's a great ecosystem they've created. We are upbeat on this particular new age business, and we would suggest a hold here as well.
All right, and that explains why, despite the correction from the top, the Nykaa is the only stock among the last few recently listed ones of the new businesses which are still holding above the IPO issue price itself. And today as well, the dip on Nykaa was bought into, sitting with a gain of almost 0.7%. Talking about the dips being bought into, the Nifty is dipped towards 17,700 was bought into, and how. A couple of stocks which are battling for the bulls out here. We have L&T, which has moved to the high point of trade, and it has a fair weight on the index as well. Bharti Airtel has had a good week so far, and today as well, it's managed to move off the lows and put its head above the water though it is still, closing in towards their flat line mark, but it is doing well. And HDFC Twins, both of them have been big drags on the index all through today's trading session, and a big drag on the Nifty Bank as well. But seems like some bit of amelioration from the lows taking place on both HDFC Limited as well as HDFC Bank. Let's see where we go from here. Take a short break, come back, more queries on the other side. Welcome back. You're watching us here on Your Stocks. We answer your queries. Still have with us Rajat Bose as well as Parthiv Shah. Gentlemen, thank you once again for joining us. Help our viewers. Danish Kazi writes to us from Prayagraj. He holds about 100 shares of Patanjali Foods, the erstwhile Ruchi Soya. He's bought it at around 1,050, making a small profit on that one. And 500 shares of Tanla Platforms, what he bought at around 270 odd rupees. He's making a big profit on Tanla Platforms as compared to his other investments, but he wants to know whether to stay invested or book profits, exit at current levels. Parthiv, in particular, your thoughts on Patanjali Foods and Tanla Platforms, given the sort of rally that it had seen and the massive decline from the highs, he's still sitting on gains. Do you think he should get out and save the profits that he's making?
See, Mangal, firstly on Patanjali Foods, no doubt I think with the palm oil business that they've had their sets of setbacks as well, knowing the fact that palm oil at one juncture became very difficult business to manage with margins shrinking and also with a lot of inventory related losses. But now it seems that globally the supply side situation has improved. And not only that, they have been heavily focusing on even other businesses quite aggressively. But what I would suggest is that as compared to Patanjali, if I look into the business model of Adani Wilmar and the rate and the pace at which they're expanding their operations, I think they're doing a fantastic job. So I would feel that, if one wants to stay in this sector, why not go with the best run company which is having a market leadership in a lot of categories in the products that they operate. And given the vision that they have openly disclosed that they prefer to be called as an FMCG company having a lot more products and try and increase their margin base from the current levels, I think that gives decent visibility. So Adani Wilmar would be a preferred bet versus Patanjali Foods. Talking about Tanla, I think it has been a stock which probably we must be discussing a lot, or we must have seen a lot of views on various chats and forums. And no doubt it has done fantastically well for the investors. But I do have some concerns here because the way sometimes the stock gyrates probably doesn't give good comforting signals. And no doubt I think the company has been performing reasonably well, but the current valuations at which it is quoting, and if I compare with a lot of other peers in the IT services space, I think somehow there's a huge dichotomy, and I feel that investor is better off parking the money in some other mid-cap IT names like I would say Oracle Financial Services, where valuation comfort is there. There's a very high dividend yield, and the product business margins are very high, and I would be more comfortable parking money there.
All right, you would be more comfortable parking money there. It'll be interesting to see, how the viewer behaves now, given the sort of decline that we've seen in Tanla Platforms from the 52-week high. The stock is corrected almost 61%. The 52-week high on the stock was 2,100 odd rupees. Rajat, for a person who's seen 2,100 rupees on a stock and from there a big decline, still sitting on a bit of profit, do you think it's prudent to take that profit home, or it gets difficult to sell after such a big drawdown?
See, as you said, that it has come down by 61% or so. That is roughly a Fibonacci level, like 61.8%. So I would suggest a stop loss level of 720 on closing price basis. If that were to be taken out, then it can actually fall another 60 to about 100 points further. And as of now, on the technical charts, Tanla doesn't really show any traction as such so that we can say that it is now going to move up or something. But maybe the fall is arrested for the time being, but market weakness might actually prompt people to sell it again. And I really wonder why when he was making almost an 8-bagger or 7-bagger, he could have actually took profits below 2,000 or maybe around 1,500. But anyway, still he is making profits below 720. He should be getting out of this position.
What are your thoughts on Adani Wilmar versus Patanjali Foods? Parthiv prefers Adani Wilmar. On the charts, which one looks better?
Adani Wilmar is better. I would suggest that Patanjali Foods are not a very good option. But only thing about Adani Wilmar and other Adani Group companies is that they are highly leveraged. That's something that bothers me a bit. Other than that, definitely Adani Wilmar is a much better choice compared to Patanjali Foods.
Okay, take that point. Let's move on to Chennai down south. Rita Pawar writes to us. She holds about 15 shares of Newland Laboratories at 1,050. She's making small gains here as well. 1121 is where the stock is quoting right now. She wants to know what she should be doing. Parthiv, do you have any thoughts on Newland Laboratories?
See, I think Newland Laboratories definitely has had its set of disappointments in terms of a lot of miss in terms of its earnings. Despite the fact that at one juncture the stock had rallied a lot, the valuations had become very rich, and post which the management was not in a position to deliver the type of results that probably the markets were expecting. And also, despite knowing that they supply key API ingredients to very big names, Teva Pharmaceuticals and a lot of such other companies, they have not been able to garner the type of margins that probably one was expecting. So our sense is it might take more time. And at this juncture, in this space, I think it's better to go with domestic run pharmaceutical companies who are operating more in the branded formulation space. And that is where a company like JB Chemical and Pharma looks extremely good and very compelling as compared to being invested into Newland Labs.
All right. Thanks a lot, Parthiv, as well as Rajat, for joining in, helping our viewers with all their queries and answering them patiently. We wish you a happy weekend and happy Janmashtami as well. Keep an eye out on the markets though. Infosys now is batting for the bulls. We have the IT index which has recovered from the lows. IT index was doing well through the start of today's trading session, though along with the market it did see a bit of sell-off, and now that dip has been bought into. So there's a spike that we're seeing on Infosys, and that spike is mirrored in the IT index itself, which after moving into the red has now moved back into the green, though off highs is supporting the index, and as a result of which the Nifty is holding above that 17,750 mark. A crucial last hour of trade coming up after this short break. Thank you so much for watching. This was Your Stocks. On the other side, we have Closing Bell.